lower highs and higher lows. Another bearish week for Tech 100. Yes, the quadruple witching has reversed the trend towards the end of the week completely. Earlier, throughout the week, Tech 100 tried to stay bullish, tried to stay on the upside. However, it was the quadruple witching which has tried to keep the prices against the trend, and hence everything has reversed towards that. So what to expect next week? Is it going to break on the downside from here, or we can again expect it to rise as it is just consolidating within the zone? Which position you should take trading Tech 100 next week, we will see with the help of charts and indicators. And towards the end, I will give you the summary of the observation along with the trading levels and trade strategies. Now, last week I have told you several times that 15,500, 550 zone is the greatest resistance. It has precisely reversed from the same levels. So now, which position you should take in order to profit? Let's have a look. And yes, do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which keeps you updated with the twice a day analysis on Tech 100. Also, you can join my free Telegram channel in order to get the live updates. Let's start. First, the charts alone. And yes, do comment and like, friends. This is a great inspiration and motivation for me. Your every comment is a great motivation for me. So do comment, like. Let's start. Now look at the last 2 weeks chart. Lower highs are yielded. Yes, it has got its resistance intact at 15,500, 550. It suggests that it is not willing to up move. At the same time, look at the candle size is getting diminished and higher lows are yielded. Now higher lows, lower highs shows zone of consolidation. Thus, it also suggests that any point of time, if you see it is staying below 15,100, do not think of buying Nasdaq from there. You can say once it stays below 1500, we are looking forward to 15,100, we are looking forward to 14,900 and 14,800 levels. Yes, it can try to trade with a slight bearish bias. Now also, if you look at on the weekly charts, you can say lower highs, lower lows, it is trying to stay, it is trying to create a flag formation. The downside for this is somewhere here at around 14,500, which was the earlier row. So 14,500, 400 is a support zone on the downside, and it is trying to create a bullish flag formation. So yes, the lows might get achieved from here. Staying below 15,100 next week, should not be thinking of buying Tech 100. At the same time, on the upside, see it is consolidating here, and 15,300 on the upside, which was the 15,250, 300 zone, and then 360 levels. These are three milestones it needs to pass by in order to confirm the rise. From here, the bullishness, and beyond 15,500 this time we can see it is staying on the upside. This is another observation. We have to keep both the observation in front of us, because see, that will give you all the probabilities that whichever direction it wants to take. This is for sure that on the upside 15,500 is going to give it a very strong resistance. Now let's have a look at the daily. On the daily chart, you can see why 15,500 was the great resistance. You can see these resistance level, and precisely it has reversed from the same levels. Now what has happened? See, the last candle was a trend reversal candle, and you can see it has earlier throughout this week it has retraced here in the higher highs, higher lows level, and this time it has breached this channel. This suggests bearishness, specifically once Tech 100 stays below 15,100. Certainly you can expect that more bearishness can be seen here. We can look forward to 14,800, 14,600, and in fact lower levels towards 14,400. Now in the weekly charts, we have seen that 14,400, 600 is definitely a resistance zone, and it is also the not only from the flag formation point of view, but also from the price action. This was the consolidation before the Tech 100 started to rise, and right now again it is staying within this channel, and the bottom of this channel again situated at around 14,400, 600 levels. So this is something on the daily charts. Let's have a look at the monthly charts. See, on the monthly charts, we are very clear that after consolidating here at 11,000 for months, we have seen this stronger recovery, and in 5 to 6 months we can see the Tech 100 has reached close to 16,000. That is almost 45 to 50% rise. Now what it's trying to do, it is trying to retrace with the lower highs here. It is trying to show a pullback. In fact, we can expect lower lows as well now, which is right now situated at around 14,300 to 200 levels. Yes, the half the month has passed by. More bearishness may prevail from here. You have to stay cautious alert. I will still recommend to take a positional sell entry. If it stays below 14,100, more bearishness may prevail, but then we have to remain cautious. 14,400, 300 levels, very strong support. First at around 14,800 levels, 14,700 levels, and then 14 400, 300 levels. Very strong support exists at around those levels, and these are achievable. At the same time, keeping the biases apart and the analysis apart, if the prices tend to rise above 15,500, 600 zone, do not think of selling Nasdaq 100. We are looking at 15,800, 600, and 16,000 levels, chances for which appears to be less. Now let's have a look with the help of indicators. Now look why there is a possibility of a drop. See, when prices were divergent from the moving average, we have seen it converging towards the 20 and 50 period moving average on the monthly charts. Now on the monthly charts, likewise, right now, moving averages are looking upward, but prices are too much divergent from the moving average. This calls for a possible convergence towards the moving average, which is right now situated at around 13,800 levels. Yes, in the coming few months, the moving average might climb up. However, the prices may come down, which suggests 14,000 levels should be a great support. Now look at monthly stochastic. This is also overbought. This calls for a possible drop down there. And at the same time, only concerning factor here is with the respect to MACD. And this monthly MACD coincides with what we have seen on the weekly charts, that a flag formation is undergoing. And if you look at the monthly charts here, see the crossover on MACD is happening after a long time. First, this bullish crossover was seen post COVID, and since then a sharp bearish trend was seen. Now, if you look at why it is trying to show a couple of red candles, the divergence was more here, and it is just trying to flag. So for this month, maybe the candle might remain red, and in fact, next month also, but then it has still lot much of room on the upside to. Hence, you should remain watchful for a couple of months at least. There could be bearishness. RSI looking downwards, staying bearish here. Coming to the weekly, on the weekly charts, likewise, see the divergence here from the moving average, then the convergence. Now again the divergence. Now possibly looking forward to a down move here again. Either it can yield lower highs or it can yield double bottom, or in fact it can breach on the downside. A breach below 14,500 will lead to 14,300, and below that more bearishness. Now see, moving averages are just crossed over. It is trading with bullishness. It can possibly converge and flatten a bit, means possibly it could consolidate. The prices might consolidate somewhere here at a 14,000, 14,500 levels before looking forward to an up move. Yes, this should be treated as a retracement, not a complete reversal of the trend here. If you look at a stochastic, this is rising. The MACD here has crossed over, trading with little divergence and trading with slight bearish bias. Now, why there could be a bear trend? You can see from where this crossover is coming is at a very high level. Now, when the crossover is at higher levels, it has a tendency to in fact cover up sharply on the downside. And this suggests that the bearishness is going to prevail, and that is why I say possibility of lower levels towards 14,400, 500, and in fact 14,000 levels is there. Though the time is a constraint, it can happen in a week or so, it can happen in a couple of weeks, but yes, the downtrend might resume from here. RSI has come out of the overbought zone on the weekly charts. Now look at the daily. Likewise, on the daily charts, moving average is just crossed over here. Right now, the prices were staying above the 20-50 average, and the closing of the candle below 50 period average suggests that there is bearishness. We can see again the price is converging, crossing over for a sell entry. There is a possibility to it. On the downside, 15,000, 14,800 levels, very strong support exists at around those levels. Stochastic looking downwards, MACD again crossing over for a sell, slight bearish sign here. But look at MACD. See, MACD has seen this wave. Now if it resumes its downtrend, it can be a sharper one. It can achieve the bottom here before reversing, and that coincides with what we had discussed here on the weekly and monthly charts. RSI is also looking downwards. This is slightly a bearish sign. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy along with the summary of the observations so that you can trade profitably. And before I provide you the trading levels strategy, if you want to learn this art of trading, you should join my mentorship batch. The 26th batch is going to start in first week of October. Limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. You can also be part of my Signals channel. Reach out to me for more details. Now first, let's talk about the levels to buy. Yes, at 15,220 you can buy. I will look forward to 15,255 first resistance, 15,300 the next, and then 15,360, 340 levels. Now remember, this is the first, this is the second resistance zone, and 15,400 the third one. These are three very strong resistances on the upside. Ultimately 15,500 it needs to breach past by. Very, very strong resistance on the upside. We have seen that last week, we have seen that preceding week as well. These are very, very strong resistances. Beyond that is where we can say, see, if it stays above 15,600, that is the point of time we can say that one should not think of selling Tech 100, and it is reversed completely. It is going to fly high. I do not think so that it is going to happen. Probability of a downside will remain very, very high. On the downside, you can sell here at 15,170. 15,170, 140, very strong support here. And then I will look forward to see 15,100 is there, but I will rather look forward to 15,050, 14,970. Any drop below 14,970, certainly there are bearish, more bearishness which is going to prevail. We can look forward to 920, 14,800. This is going to be a great support on the downside, 14,800 and 920 levels. And below 800 is where the bearishness may prevail. We can look forward to 14,660, 14,500 and then 400 levels. Very strong support there on the downside. So take positions accordingly. Trade accordingly, trade with a stop loss, trade with a trailing stop loss. Do like, share, subscribe and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead, and do stay tuned with the twice a day analysis which I share for Tech 100. First with the Asia and Europe session and next with the US session. These two twice a day analysis definitely adds meaning to your day trading decisions. Do watch them as well. Thank you. Have a great profitable trading week. Happy weekend. Stay blessed.